On today's episode, I have KC Chohan, who is the founder of Together CFO and the host of a terrific podcast, The CEO Story. And he works with small business owners, optimizing tax structures, mitigating taxes, providing outsourced CFO services. So I'm really looking forward to this discussion. KC, thanks for taking a few minutes with me today.
No problem. Thank you for having me on, Chris.
So one question I usually start with, because to let listeners know, I don't know Casey outside of meeting him through a podcast community. So one question I like to ask, just to kind of set the stage, tell me about growing up, the house you grew up in. Would you describe it as poor, middle class, upper middle class? How would you categorize it?
Middle class to slightly upper middle class.
You give advice on financial matters, tax matters, but thinking back to your youth, what are some of the early money lessons, things that you remember about learning about money at a relatively early age? Can you think of anything?
Yeah, absolutely. So one of the key principles that my father instilled into me, my brother, at a young age was to earn your money. There's no such thing as a free lunch. So we used to clean the cars, wash them, vacuum them, wax them, and then the same with his shoes. My brother would either do the cars or I would, and the other one would do my dad's shoes. So we'd have to polish and clean all of his shoes, and then we would earn our money that way when we were young. So definitely instilled that lesson that in order to get a reward, you've got to earn it.
So it sounds like, and I know this is very basic, but it sounds like that's something that you learned at a young age and has stayed with you, looking at your companies you founded, the work you do, the podcasts you do. I mean, that you have a terrific work ethic. So that is a lesson you've certainly taken with you throughout your lifetime.
Yeah, definitely. And more importantly, will instill in my future family as well, because it's benefited me so much, kind of knowing that everything isn't just given to you. You've got to earn it. You've got to fight for it. And especially in the real world where that lesson is really, it's a battlefield. You go into battle with everyone else in your industry or sector that's competing with you. And no one's just going to hand it to you on a plate. You've got to earn it yourself.
Do you think that work ethic, that ethos that you learned, that I also learned, and many, many people in this country learned, whether they were born here or emigrated here, do you think that that's a little out of favor in today's America?
Yeah, I think so. I think there's definitely a big difference in values, generally speaking. And more so, I think the younger generation now have different values. I don't think there's right or wrong here, but they're more focused on different things than people of an older age.
All right. So you started your career in a role where you worked for someone, correct? As an accountant, I believe?
Yeah, that's right. I started at the university, went into accounting, realized that bookkeeping wasn't really for me. It was very boring and mundane once I'd figured that out, and then quickly pivoted, still in the accounting realm, but more in the management accounting rather than the day-to-day debits and credits, which were not a good fit for my personality type.
I see. So then you not only decided that that pure accounting was not for you, you also went the entrepreneurial route. Can you talk about that journey from being a W-2 employee to not just shifting from the work you do, but also starting out in your own business?
Yeah, well, that happened many years later. Back in 2016, I went full-time with my own business. Along that entrepreneurial journey with lots of side gigs and side hustles, as I think the phrase is over here in America. But back in 2016, I went full-time with Together CFO, which was a big step. And along the way to kind of ramping up to that step, I was working part-time with smaller businesses until I finally took that leap of faith and quit the corporate job, which was tough because at that point in time, you're making a really good multiple six-figure salary to give that up and kind of go it alone, you've got to put a lot of trust and faith in yourself. And yeah, it was a tough point, but I look back at it now and definitely the right decision for me.
Beautiful. So let's fast forward to today. It seems like you have your hand in a couple of different endeavors, but let me ask you, I mean, what would you say is your focal point across these couple of different things you have going on? How are, or what areas are you trying to help small businesses with?
Predominantly with financial education, understanding the numbers, the KPIs, and how to scale their business. And then the second part is on tax structures, making sure that they're fully tax optimized. Over 80% of people overpay on their taxes every single year, which is a statistic released by the IRS, which I just think is absolutely crazy number.
So let's circle back on a few things. The IRS put out a report that estimates that 80% of small businesses or Americans in general overpay on their taxes.
Americans in general.
That's crazy.
Yeah.
I don't think I've seen that. You'll have to send me that, or maybe if you don't mind, point that to me.
Yeah, I'll send you it, and I'll even go one better. The total amount that the IRS received in overpayments was $458 billion in 2019.
All right. The other thing I wanted to circle back on, you used an acronym KPI. So just to make sure we're all on the same page, what does KPI stand for?
It's key performance indicator. And that's a metric for a business to use to see that it's trending in the right direction, or if there's any issues going on in the business, that they can highlight them sooner rather than later.
So let's focus on that a little bit, because correct me if I'm wrong, the key performance indicators for my practice are going to be different than probably your business, and would be different for, say, a business that has inventory. So KPIs will differ company to company and industry to industry. Is that fair?
Yeah, and they should, because they should be tailored to your specific situation. So yes, definitely should be different.
So in my practice, KC, we're tracking about 8 KPIs, and we track them monthly. And I have somebody on the team actually prepare the numbers for me, and then I review them once a month. So I guess my question is, and go easy on me if there's criticism, but do criticize, is that too many, too little, or just about right? What would you, what advice would you give?
There's no right or wrong here without intimately knowing your business. You could have so many more, you could have a few less. It really depends on the different subsections of your business. And the way I would phrase it is, if you look at your organization and then your departments within the organization, are each of those departments responsible for a few of those KPIs?
Yes.
And I think that would be the best kind of framework to look at, is that within each of those departments, you want to know that the top 2 or 3 numbers that each of those leaders are responsible for are trended in the right direction. So I think as long as you have a couple of good indicators per department, per leadership team member, however your company is organized, then that would be a good place to start.
All right. That's very good. And it seems to me the small business marketplace, now that small business means different people, in different circumstances, but I'm talking more, 50 and under employees, small, closely held family businesses, sole proprietorships or single LLCs. I find that a common failing of those business owners is not paying due attention to KPIs. They're so busy running the business and just day to day dealing with all that comes across their desk, juggling so many priorities, that they don't spend enough time recognizing what are the KPIs for them and not putting in the time managing that or monitoring that because they're so busy. Do you find that too?
All the time. And the way I phrase it is, they're too busy working in the business rather than on the business.
And So I think that's a good piece of information. You not only have to work on your business or in your business, but work on your business and to take time. And it really doesn't take, depending on the size and scope of the business, it doesn't take that much time to figure out, what are the key metrics and then to monitor them and adjust to trends and talk to people about what numbers are working and maybe some that are having some setbacks. Yeah, you were not talking about a new part-time job for a business leader. Is that right?
No, if it's set up in the right way, I think you've got a good system where you've got a team member that's collecting that and presenting it to you. So it's quite efficient use of your time to have the team kind of own their numbers and report them up to you. And you could spend an hour a week or an hour a month reviewing that and putting the corrections in place that need to happen for you to reach your goals.
And one thing before we move on from the KPI topic, is it also fair to say that your KPIs can change year to year depending on the evolution of the business, what initiatives the business is undertaking, plus changing market conditions and dynamics? They don't have to be static. Is that a good?
Yeah, correct. Yeah, I would recommend reviewing them on a quarterly basis just to make sure that they are still current and in line with your company goals. And we can use COVID as an example that at the start of the year, nobody knew this was going on, but by the end of Q1, the whole world has changed. Yeah. And if you're looking at an outdated set of KPIs and you don't pivot and adjust, then you're probably going to be steering the ship in the wrong direction.
I noticed in preparing for our conversation on your website, you had, I don't think this is a quote, but it was something along these lines that you're focused on results over perception. Can you talk a little bit about what that means and perhaps provide some examples for issues you see in businesses that are focused too much on perception?
Yeah, that phrase was actually, I think, in my bio, and it was more related to my days in corporate America. So I was working a lot of hours in an office, and the perception of that corporate environment was that if you weren't working 12 to 14 hours a day, your work wasn't enough. And it just didn't fundamentally agree with everything that I stand for. So we were misaligned in our values, which is one of the reasons I left corporate America to start my own company. And one of the ways we price in my business is based on the value that we offer. So I'm really big on having the results speak for themselves and earning my money based on the value that I provide to my clients.
I think that's great. And, we were talking a little bit sort of off the cuff at the beginning about maybe that work ethic that previous generations grew up with is under a little bit of strain and maybe a little bit out of favor. But if you marry what you just described with that thought, it is deservedly out of favor, I think, the idea that you have to work max hours at your desk to be successful. That there is an enlightened movement, I think, about being efficient, managing time effectively, getting more done in less time. And that means that you can still accomplish a lot, work hard, but not have it be tied to the clock or the number of man hours. And I know for my business, for me personally, that has been a focal point for a long time where I would like to get more done in less time. And I want to set up my business, my life, so that I could put lots and lots of wonderful things on my plate, business and personal. I want to have good work-life balance. And so maybe that ethic isn't under as much threat as I think if we keep it under the lens of doing and getting more done with less. Does that make any sense?
Yeah, it does. It makes a lot of sense. And kind of the way that I do it, it's tough because the rest of my industry is charging X amount of dollars for, let's just say, a tax filing every year. You pay a couple of $1,000s to your CPA every year for your tax filing. And we just do things very differently here. So what we offer is, again, very different to the norm. And therefore, it deserves a different pricing structure than the set box that kind of is the perception of the industry that it should be.
So if you'll allow me, I had a personal example of this. Something was broke at my house, and we had somebody come out and take a look at it, and they diagnosed the problem that we could not figure out almost instantaneous. They're like, I've seen this before. It seems kind of odd, but I need to do this, this, and this. Goes out to his truck, comes back in, does a few quick things. This whole process takes like less than 15 minutes and gives us a bill. And it's a pretty good bill. And the comment was initially, I can't believe we got charged this much for 15 minutes. But that's not what we got charged for. We got charged for that guy somewhere along the line knowing exactly what was wrong, what was happening internal to the system without breaking it apart, without spending a lot of time tinkering or experimenting. He made an accurate, quick diagnosis based on his experience and skill level. And that's what we were paying for, not the 15 minutes.
Yeah, absolutely. And it's the same with the medical profession. It's the same with most of the professions where these people have went through years of schooling and education and learning on the job as well to be able to come to your house and fix that so quickly and efficiently without having to rip out drywall or floorboards or whatever the rest of that would entail. And that's ultimately you pay for value, not necessarily the time.
Yeah, that's awesome. So I did an interview recently, and one of the topics of conversation, Casey, was the importance of understanding financial statements for business owners. And I know this is an area of expertise for you. How often do you encounter clients in your line of work that don't have enough knowledge about their financial statements?
The majority of the time, it's the case, because when you think of the entrepreneurs that are kind of the mavericks in that industry, the majority of the time they don't have a finance background. They are salespeople, or they're operations people, or they're people with a certain knowledge of a certain industry. And 9 times out of 10, I would argue they are not finance people from an education or background. So as they kind of go through the motions of building a startup, you look at how do you build a startup? Well, you don't have a company if you don't have any sales. So you've got to build sales funnels, marketing, and operations first before you get to kind of the finance department, which in my experience seems to be an afterthought for a lot of entrepreneurs as they're scaling their businesses. And that then leads to putting off finances, budget reviews, KPIs, all the things that we've been talking about,
right?
Taxes, and having that as an afterthought and focusing more on the craziness of the day-to-day of kind of being in the business, which, as we all know, the startup phase is pretty hectic. And then when you scale to a certain level, you'll maybe then start hiring some finance people, or you go from outsourced to internal and you scale that way. But that doesn't mean that the owners or the people running that business have a finance background or knowledge. So education in that is always where we start.
It seems to me, and I do not do the work that you do, but it seems to me along these lines that an awful lot of business owners perhaps over focus on top line growth. They want to grow the gross revenues, and they fail to appreciate what happens in the middle part of their profit and loss statement where the expenses occur, and thus they are not maximizing or really addressing how that impacts the bottom line, which is the profits. Is that a fair assessment on my part?
Yeah, it is. And I'd add to it in one certain way where I'd say that they're more focused on the top line and the profit numbers, but they should really be more focused on cash flow number, because that's the number one killer of small businesses in America. It's not lack of profitability, but it's lack of cash flow. If you don't have enough money to pay payroll at the end of a week or at the end of a month, then you've got a much bigger problem than if your net profit is negative. You can use Uber as an example. The company hasn't made profit in a very long time, yet it's still got a crazy valuation, and it's got cash flow supported by a lot of VCs that keep pumping money into it. So you could have a business that is making a loss, but as long as it has the cash flow to operate, it can still be in existence. But if you reverse that around, if you have a business that doesn't have any cash flow, but has profitability, you can't liquidate it, your staff will leave you pretty quickly.
Yes. And then also, correct me if I'm wrong, it also makes you vulnerable when things go awry, when you have some unexpected problems, which you should expect. You don't have the resources to get through those periods. That makes you very, very vulnerable. You're not a resilient business.
Yeah, absolutely. And that comes back down to having good forecasts and budgets in place and knowing really what's going on with your business. And that boils down to your financial statements and your KPIs.
And you would agree with me that business owners, they don't need to be an expert in this stuff. They don't need to be a financial geek like I am, and I suspect you are, but they need to pay enough attention to stay ahead of the game. And they could lean on team members, folks like CPAs, outsourcing CFO services like you do, certified financial planners, internal partners, and employees. I mean, you don't have to do it all on your own, but it can't be something that you ignore because you do it at your own detriment.
Yeah, correct. The way I would phrase it is you have to have a base level of understanding so that at least you can engage in a conversation. And if something isn't going the right way, be able to identify it and course correct. But yeah, you definitely don't have to be an expert in everything. You couldn't possibly scale a business if you were an expert in everything. You've got to be able to delegate, you've got to be able to trust a team in order to scale a business.
Very good. So do you think with technology where you could do payroll online and you have QuickBooks, and we're all leveraging technology to greater and greater degrees to be more knowledgeable, efficient, it's adding so much positives, and there's some negatives too, but adding so many positives. Do you find that the advancement of technology is helping with financial education, helping business owners understanding their financial statements, or there's still a disconnect regarding, regardless of, platform changes and the ease of information delivery through technology?
Yeah, I think it's getting better. There's lots of new ways to kind of learn now. Online learning is massive. But I still think there's a big disconnect there, where my opinion is a lot of people that aren't finance people will their eyes will glaze over pretty quickly when they're looking at a set of financial statements that they don't really understand, as opposed to if they had a team member that could explain that in an understandable way, that it wasn't too finance related, but got the points across. That's a lot of what we do at kind of a CFO level, is look at the big picture and talk strategically to the leaders of a business, rather than focusing in on EBITDA percentages or, cash flow cycle numbers, where they probably wouldn't understand a lot of the advanced accounting terminology. But when you phrase it in a way that, hey, this is how we value the company and we get a 7x return on our EBITDA, so how do we make that better? 2 ways: increase the revenue, decrease the expenses, and kind of breaking it down into small manageable chunks rather than getting too in the weeds of advanced accounting terms.
Very good. So let's switch gears slightly. You have a terrific podcast, The CEO Story, and you interview business leaders on their successes, failures, and overall advice. I think actually I'm going to be a guest on your show, which I'm really excited about. Is there any career advice that you have heard that you think that your audience ought to pay particular attention to?
Yeah, it's really learning your craft. I think especially with the younger community, everyone's an overnight expert at everything these days. And there's so many gurus out there that are doing overnight $1 million transactions and what have you. And I think there's a lot to be said about really understanding and mastering your craft before you go into kind of your own business or try and scale something yourself. Is understand what it is that you're doing, learn it thoroughly. Don't just be 1 or 2 steps ahead of the next person, but really master that.
Yeah, I love that answer, Casey. That is terrific advice. Love the answer. So you're an entrepreneur in your own right and run a business in your own right. And now, as I said, have interviewed lots of successful business leaders. What are some common traits that you find as you meet successful business owners from lots of different age groups, industries, probably geography? What are some common traits that you could point to?
A couple, let's start with focus. They're very focused on hitting the tasks and they're very determined. So that there's always a level of drive and skill there. And then if we boil it down to the next level, they all have a lot of specific industry experience. So they've been educated, or even if they're not necessarily educated, but they've been in an industry and they understand the nuances within that industry. And they're the ones that go on to be really successful because they know the ins and outs of how that operates, how it works, so that when they start their own business doing a similar thing, it's nothing new to them.
So on both the last two questions, your answer pertained to becoming an expert, focus, become an expert on your craft, mastering your field. Should we take that? I want to be careful how I say this. Should we, KC, take that to mean that you need lots of years in the business? In other words, is this something that you got to wait until you're 40 or 50 years old to check that box? Is it a time thing?
No, it's not necessarily a time thing. We don't have to get it confused with like doing your 10,000 hours worth of mastering, like the Malcolm Gladwell book, Outliers. But it's more about knowing what it is you're doing. And you could know what you're doing within a relatively short space of time in your industry. As an example, when I left university and I started my first job as a bookkeeper, it didn't take me 10 years to figure out how to become a bookkeeper. I did that relatively quickly and realized that this is not something that I want to do for the rest of my life. But I mastered that craft. It took a year or so for me to really understand multiple different situations. But once I'd got that knowledge and I wasn't learning anymore, I then moved on. So you could reframe that as once you stop learning and growing, to then start something different.
Yeah, very good. I think as we begin to wrap up, I want to just talk a little bit about the subject of failures, setbacks, things like that. I asked about common traits that help people be successful, and you gave that great answer. Thinking about sort of that same subject, but through the lens of, things are not going to go your way. 2020 is a great example. A lot of businesses had to overcome some level of difficulty this year. There's going to be failure. Anything I've ever read about somebody that's been very successful, they've had to overcome failure. They've had to be resilient. What are some common traits you see in successful leaders that allow them to plow through failures where, at least in my life, Casey, I know some folks where they got knocked around a little bit and they were never the same. I don't mean physically never the same, but they became gun shy and much more timid. And also they would always point to that as sort of a blame. They could never really move beyond it, but successful people are able to do that. So what are some common traits that you see on overcoming failures, some commonality?
You've got to have a thick skin to start off with. You've got to really believe in yourself and what it is that you're trying to achieve, because it's easy for people to say, no, I don't want to invest in this, or I don't want to be part of this, or not believe in you or what you're doing. But as long as you have that drive, you trust your gut instinct and keep going. You can use Colonel Sanders as an example. He got rejected over 1,000 times. And if he didn't keep going, then we wouldn't have KFC right now. And there's multiple examples of that. Nikola Tesla, he's doing thousands of experiments and failing a lot of the times. And then finally you get the light bulb and electricity and all these amazing things from sheer persistence and will. And you need to develop a thick skin so that the times that you get the no's and the rejections or the bad days at work, because it isn't always good. It's not always a straight line trajectory from here to overnight success. There's multiple years and so many hours of effort that go into all success. It doesn't happen overnight. And one of the phrases I like to use is, the harder I work, the luckier I get.
Oh, yeah.
Because people don't see the graft that goes into it. So just to keep going and having that belief in yourself. And I think, when we're younger and when we were children, everyone wanted to be an astronaut or a pilot or something really ambitious.
Sure.
And then as we kind of grow up, that ambition, that gut feeling, kind of society washes that away from us. So then when you come back into the entrepreneur world, you're creating that reality yourself again. So it's kind of getting back in tune with your gut instincts and your feelings and believing in yourself ultimately.
So that's, again, a terrific answer. I love it. I especially like, I think early on you had said having a thick skin, being able to take criticism and learn from it, or take criticism and realize that the person giving you the criticism is wrong because you have a vision and you know yourself. But having a thick skin, if you want to achieve significant success and to live a fulfilling life, I think that's unbelievably important. You can't shrink from people saying not nice things, especially when they're true. Because as a business, sometimes, there's failures. Some customers are not served as well as you would like, and you're going to take that criticism. You have to learn from it, but you do need a thick skin. And I really like that part of your answer. Hey, KC, for listeners who would like to find out more about you and your different business interests, how do they do so?
The best way to reach out to us is just from our website, which is togethercfo.com. And you could do a quick tax calculation on the website to see how much you're being overpaying on taxes. And hopefully we can help support you however we can.
Beautiful. Thank you. Also, check out his show. Tell everyone again the name of your show.
It's the CEO Story, and that's on all podcast platforms from Apple iTunes to Spotify and YouTube as well.
So I would be remiss, listeners, if I didn't ask for you to subscribe to the podcast if you haven't done so already. And it would be terrific if you could recommend it to a friend, family member, coworker. I'm super appreciative if you do that. I will be back with you on the next episode of the Simply Financial podcast very soon. Thanks for listening today.
The views expressed are not necessarily the opinion of SagePoint Financial Incorporated and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should be relied upon when coordinated with individual professional advice. Please note, the information being provided is strictly as a courtesy. When you link to any of the websites provided here, you are leaving this website. We make no representation as to the completeness or accuracy of the information provided at these websites, nor is the company liable for any direct or indirect technical or system issues or any consequences arising out of your access to your use of third-party technologies, websites, information, and programs made available through this website. When you access one of these websites, you are leaving our website and assume total responsibility and risk for your use of the websites you are linking to. Securities and advisory services are offered through SagePoint Financial Incorporated, member FINRA SIPC. Insurance services offered through Elliott Wealth Management, LLC, not affiliated with SagePoint Financial.